We all have known that gold has made very good run in the last couple of years. But how good run exactly? Well, here's the thing. In late 2022, gold was around 1,600, and now just a couple of weeks ago it were nearly 5,600. It's still standing close to these prices, but that also overall means that it rose nearly fourfold. That means it simply crashed all global stock market indices, and those who held gold had way better years than stock market investors. And that's despite the fact that in stock markets we also had really good runs, and stock market also sits near at all-time highs across all global indices. Question is this short couple of years luck and this is simply taken out of context, or gold is really worthwhile tool for investors and traders? Well, let's split this up in a couple of batches: last couple of years, last couple of decades, and last century. Firstly, in last 5 years, if you were a long-term trader, you simply have to buy gold when it's above long-term moving average and collect your money. If you are a gold investor since 2020, same thing. Yes, it had a couple of choppy months, but it simply skyrocketed in the last couple of years. So you couldn't do anything else but count your money and your gains on gold. The fortune was yours. How it fared since 2000? Well, actually, these last couple of years made gold returns significantly better than returns of global stock market indices. And this is included the fact that global stock market indices also had one of the greatest runs ever. So if you started to invest in gold, you probably started to invest at around 300 per ounce prices, and that means it has made nearly 20-fold return, which is higher than most stock market indices, depending on which stock market indices you look at. So yes, gold had better run in last couple of 25 years, which was amplified by the fact that it nearly quadrupled in its value in last couple of years. But if you look at history of gold since 1980 till 2000, you could see that gold fell from $800 to those $300, and actually it had significant bear market, when at the same time stock market had one of the greatest bull runs ever. It wasn't as good as last 25 years, but it was still pretty good, because 80s and especially second half of 90s were the best markets in recent history of financial markets. But if we go even further and see what happens in the 70s till 1980, then we see that gold actually rose from $35 to $800. So actually, if we look at 1970 till today, we see that it really depends on decade. There might be decades when gold outperforms, then might be decades when stocks outperform. And what's the conclusion? I would say objectively you have to split your assets between stock market indices and gold, because stock market indices are a good place to invest. History has showed it for decade and decade again. And also, if we live at times of free floating currencies and when central banks are by default setting up slight inflation, this is a good place to be, because it will work as a natural hedge. You don't know which decade and in which I would say scope or magnitude, but you will know that gold will be safe and it will work, and you will make some kind of money out of it. As for investors, simply keep your assets in proportions between gold and stock market indices. What's the proportion? Depending on your taste and place where you live. But typically like 20% of gold is pretty good. What happens if you are a trader? Well, history has shown that gold has made good long-term trends both in upwards and downwards directions. So that means you simply follow long-term trends, and global geopolitics and central bank policies will create long-term opportunities for you, and you always will make money regardless whether this is long-term bull markets, whether this was in the 70s or it is now, or long-term bear markets as it was in 1980s. You always have money-making opportunities if you trade gold. But here's the thing, why I'm deliberately saying 1970s till today, because before 1970s, gold was fixed according to Bretton Woods Agreement, and before Bretton Woods Agreement, which started in late 40s, in the United States, you actually couldn't own or trade gold because it was prohibited by the law in times of Great Depression. So here we are going to slightly more complex history, because we see that Gold wasn't tradable instrument as we are using it now, it was only store of value. And here conversation gets trickier, because if one asks what's the best performing asset of last 100 years, I really have to ask you whether you are living in the United States. Then if you were and you started to invest in gold in 1920s, then probably government would take your gold and swap it to your dollar savings in times of Great Depression of all times. And gold actually was fixed for 40 years, so it wasn't had any use of as an investing tool. And then after 50 years in 1970s, 50 years in 1970s, you actually could started to invest and trade with gold. So for the last 100 years, you couldn't invest in gold, or there was no use of gold as an investment. And for the last 50 years, you could. But if you are not a United States investor, what if you are Central or Eastern European investor, and your grandfather would be successful businessman and investor in 1926, not 2026, and he had to leave inheritance to next generations? What would be a better choice, to invest in bonds and stocks from 1920s Latvia, 1920s Czechoslovakia, 1920s Poland, 1920s Germany, or in gold? Because if he were held his securities in government bonds or stocks of these countries or regions, all of these securities effectively were worthless. If he held currency in these countries, it effectively went worthless. But if he simply dig a hole in the ground in some far forest in Latvia and stored their gold, and left some sort of note which would materialize only now, and that note would be somehow mysteriously received to me by some Swiss banker, I could go out to that exact location, dig out gold, and it will be worth something. That's the thing about gold. When something really bad happens, when something goes out of the way, you will always convert and use gold. Whether there is regime change, wars, civil wars, instabilities, whatever, gold would always have some value. But if the times are stable and prosperous, well, there might be a better place for if you invest in stocks. So that's the conclusion. Conclusion is inconclusive. Mix your investment between gold and stocks. If something really bad happens, gold would outperform. But if you are a trader, you always make money on bullish and bearish trends, because that's how the way the markets work.